Welcome to Navigating Carbon, your compass to carbon management. I'm your host, Deb Ryan, and I'm back today with another great discussion. My guest for this episode is Julie Lerner. She's a veteran in the agricultural trading space and most recently has been moving into the agricultural carbon credit market. We discuss some of the challenges that farmers face in this space, as well as some of the roadblocks that exist that will allow for this particular segment of the market to scale. As always, if you want to hear about upcoming episodes, please like or subscribe to the podcast. But for now, sit back and enjoy my discussion with Julie Lerner. Hi, and welcome to another episode of Navigating Carbon. I'm Deb Ryan, and today I'm joined by Julie Lerner. Julie, welcome. Thanks for joining me.
Thanks for the invite, Deb. Looking forward to chatting with you.
Yeah. So as we kind of kick off and we're going to be talking today about like all things agriculture and what that looks like in terms of like the carbon market space and some of that kind of stuff. So can you just start with giving the audience a little bit of your background and around agriculture and the markets?
Sure, absolutely. So my background is in the physical commodity trade, moving product from one country to another, predominantly with a company called Cargill. Most of you know that. I founded a company called Pan Exchange as a trade venue for those traders. That was meant to be a trading tool for the users. But our business model was based on the ability to make benchmark prices and really juicy real-time market analysis based on the activity that was on that platform. From our inception, Pan Exchange was built to scale across multiple markets, and we may touch on that a little bit later. Some of our most notable markets, the first one, believe it or not, was in East Africa. We started in Kenya for corn, ended up expanding across 30 different types of grains and beans across 3 countries in that region. Another big one, notable one, was the 80 million ton proppant market here in the US, also known as frac sand. And more recently, hemp, as soon as the 2018 Farm Bill became legal. So, when we were looking for our next market, all roads kept leading to carbon. And it was a natural expansion for hemp because hemp is a very carbon friendly crop. Um, and we were just going to build a consortium and have everybody come to our platform. And the premise, and this part has not changed, if you earn a credit and you either through us or through someone else, and you bring a credit to Pan Exchange, you earn 100% of the value of that credit. No broker fees, buy side pays our commission. And we felt that was the only equitable way to help scale this market. But diving deeper, we realized that in order to earn credits, everything out there was far too risky, far too time consuming, and far too expensive for the average farmer. So, diversification. We created our own methodologies for soil and biomass to help farmers earn those credits. So it would be a fully streamlined event from earning a credit to selling a credit with as few hands in the pot that, no one had fewer hands in the pot taking money away from the farmer than we did.
That's
Um,
really cool. So yeah, I mean, I'm just going to
yeah.
jump in there quickly because like so much to unpack, which is awesome. So like you gave us a little bit of a flavor of kind of how Pan Exchange really started getting into the carbon market space, and you mentioned really briefly why hemp is such a good crop in terms of generating credits. Can you explain and elaborate on that just a bit more for the listeners?
Sure. So we'll get into a little more of the different types of ag credits, but we're predominantly talking about soil. That's the biggest one. Um, so most people, when you say hemp, they think cannabinoid, CBD. It looks exactly like weed. You either send it to a lab or smoke it, and then you don't know the difference. That's actually a fat, bushy plant. You want it to
Okay.
flower. The future of the hemp market is in the fiber and the grain. Hempcrete, packaging materials, textiles, numerous uses. That plant doesn't even look like the same plant. It is tight crops, tight row crops with really long roots, skinny. And what that means is the more roots you have in the ground, the more carbon you're sequestering in that soil. So I I'm bullish on hemp for a lot of reasons. There's a whole nother podcast we can do about the market getting in its own way and all of that. But it has tremendous potential in this space.
Okay. And like, you talk about specifically, in terms of the generating of the credits and stuff, it's not necessarily through the plant itself, it's really through the root system and what it's doing to the soils. Can you explain a little bit about like in the agriculture space around carbon, there's lots of different types of credits. So can you explain why the soil credits sort of, are what they are and maybe a little bit different to some of the other ones and stuff like that?
Sure. So there's a few different types of ag credits. Soil is the most popular one, and that is literally sequestering more soil, more carbon in the soil than you were previously. There's also biomass credits, and that's the carbon in the stalk. Now, that one is much harder to earn the credit because you have to do a life cycle assessment that has to be peer reviewed and accepted by multiple sources. And unfortunately, you can't say, well, those guys over in California did an LCA. And it's like, nope, you have to, this specific supply chain needs to have its own verified LCA. So it's not impossible, it just takes time and money.
That makes sense.
Then the other one, super popular but also been controversial lately, of course, is forestry credits. So that's either preserving a forest that could have been cut down or reforestation. And as you know, there's been a lot of scandal around that with people getting credits for land that was not allowed to be cut down anyway. So, growing pains in this market. Methane credits is another one. And methane, boy, we need to really get on that one because methane's such a noxious gas. But that would involve, for example, giving biochar and other nutrients to livestock so that they emit less methane.
Okay.
And then the fourth one, the big one, is soil nutrients, and that's just using less toxic chemicals and less water and emitting less greenhouse gas emissions in the production of.
Okay. So thinking about then the hemp credit, specifically looking at the actual sequestering of carbon in the soil and stuff, you sort of started talking before about then the methodology and the what you guys put in place with Pan Exchange with the farmers. Can you explain then why it was much easier for them to think about their practices and what that methodology entailed to look at this soil sequestration?
Well, the first nut we wanted to crack was how to do it cheaper and quicker than an entity like Vera. Because last I checked, and it's been a while, but it was at least 2 years just to get started. And it was well over $200,000. So the size of the farm you need to make that a profitable business entity already was knocking out the largest swath of farmers in our country. And so that's where we started. And then we started looking at, there were various methodologies out there. There were other newcomers like Pan Exchange. And so we looked at all of these different methodologies and we took what works for farmers, what doesn't work for farmers. So, for example, the proxy for permanence. Now, I do want to get into permanence and you'll probably have to cut me off on my tirade, but the proxy for permanence with some of the established registries is 10 years, which means your credits are not issued for 10 years. You can forward sell some of them, but it's not official till then. And what the proxy means is you've been doing it for 10 years. That means we're going to be doing it forever. Therefore, grant us our credit. So one example of we did just to make this more friendly for the farmer is how about 5 years? That should be enough, right? And so we just went through. Do you want me to jump into how you earn a carbon
Well,
credit?
let's talk about so the time piece of this and why that's so important for the farmers. Like, if I understand it correctly, and correct me if I'm wrong, because I might not, is when we're talking about that 10-year time period and cutting it back to 5, it's 10 years of like every year the farmer having to demonstrate and show that they're going through and following stringent farm practices and planting and all of this kind of stuff before they even see the benefit of being able to generate the credits. Is my understanding in that correct? And also kind of then why it's helpful to be able to like reduce that time and to work with the farmers and things like that.
So you actually touched on two different components of it.
Okay. All right.
So
Yeah, explain that.
the first thing you need to do, you find your project developer, and which includes your methodology. Then you establish your baseline, how much carbon's in the soil, because it's not a carbon credit unless you show additionality, which I always found to be an oxymoronic word. But it really means in the sense of sequestering additional carbon. And so so that's where you start. Now the second, and then you verify that, and then the clock starts, right, for the proxy.
Okay.
The proxy represents permanence. And so, I mean, again, this is where the problem is. When a farmer signs on the dotted line, they are guaranteeing, and cover cropping is one significant way, rotational crops is another way. The biggest way to sequester more carbon in the soil is not to till it. When you till it at the beginning of the season before you plant, you're stirring up all the dirt, it's letting all the carbon out of the air.
Okay. Yeah, and releasing everything again.
So,
Makes
so
sense.
the challenge for the farmer is you're basically saying you will never till it again. You're going to keep that
Wow.
carbon in there. And you see where the problem is.
Yep.
So, like with our methodology, you could decide, I don't want to grow hemp anymore. The market's in the can, nobody wants it. I'm going to grow a different crop. That's fine. Um, just don't till the soil.
Yeah.
So,
And
so
that's because,
yeah.
yeah, you talked then a little bit about the permanence piece. And so is that then based on those initial baselines and things like that in terms of, I assume there's then ongoing testing and things like that. So permanence being the fact that that carbon that's been sequestered isn't being re-released like you're talking about with the tilling.
Right. Well, it's tested in the beginning, and usually you test it at least annually. But again, then you have this third party validator at the end who says this is a sound methodology, the baseline was accurate, and now we have the end results. And yes, you have sequestered that carbon. So technically, the program's over, with the exception of you're technically not allowed to till that soil again. Now, the interesting thing is today, there is no governing body that comes back and verifies 15 years later whether you've done it or not, but there's always a risk of something like that happening. It's an outside risk to the farmer.
Yeah. And particularly, I think, you talked about scale and with the methodology you guys were looking at, it was allowing you to look at maybe smaller acreage farms and some of that kind of stuff so that, the value was there for the farmers. Can you address like, given, the scale or the difference in size of different farms and like how to even like approach that, like scaling this market and like there's so many different sort of sizes and stuff of farms as well. Like, surely that's got to be a huge challenge in this space for folks as well.
It is. So, on the upside, one fun thing about a soil carbon credit program is that you can aggregate farms
Oh, that's good.
across the country. They do not, I love to get to use the word non-contiguous. So it can be non-contiguous land as long as it's the same practice everywhere.
Okay.
The challenge really, and gosh, I'm sorry, I should have dusted off my notes on this. I think with hemp and our program, we ran the numbers, and you can be in the black with our carbon program for a mere 230 acres,
Okay.
if you're doing just hemp and just not tilling. Um, but but the reality is, with these other cash crops, the bigger crops, you need thousands of acres to make it profitable. Here's
Okay.
another challenge I have on the permanence issue. Many of these large farmers are actually owned, or these farmlands are owned by corporations, and they contract farm. They lease the land. They hire managers. Those are 3-year contracts.
Oh,
You see the conundrum there, right?
Yep.
And we couldn't, it's bad optics and beyond optics, probably bad reality if we were to lower our proxy for permanence to 3 years, because it's not a proxy, it's when the lease is renewed, right?
Yep.
So you can see a landowner can't really successfully negotiate a new lease agreement if they're in the middle of this carbon program.
Yeah. No,
So
that's really challenging.
and that is in my opinion, the single biggest obstacle to scaling in U.S. farming.
Okay. Yeah, just some of those different sort of timepieces and some of that kind of stuff with it. And then, I mean, is there also challenges around? I know something you and I have talked about is around like the compensation for farmers. Is that kind of tied to some of these time sort of horizons and some of that kind of stuff as well? Is that part of that same problem?
Yeah, putting it together as a whole. I mean,
Yeah.
the again, when we first got into it, okay, you've got to pay your project developer, you have to pay your DMRV, that's the firm that measures and monitors. You have to pay the firm that verifies and validates at the end, um, and then oftentimes a broker, and then a commission on the sale. I mean, so there's too many hands in the pot, and already it's barely lucrative for a 3,000 acre farmer, which is sizable to,
Yeah.
to in the eyes of many. Um, and then you get all these hands in the pot and all this time and all these risks, and you can see why it's like, yeah, I don't know if I really need that. So,
Yeah. And then with
um,
the additional issues around the leases and the time scale and the commitments and some of that kind of stuff, if, yeah, having that along with the compensation makes sense why it can be a challenge. So, yeah.
but I do think there is a way to solve this. And again,
Hmm.
it's the permanence issue. We need to just stop talking about it. And what we need to do is reframe it in the sense of let's reward farmers for doing climate smart practices year after year.
That makes
So,
sense.
subsidies. I mean, the USDA just spent over $3 billion on climate smart ag grants. And, tragically, the majority were like 90 million going to the top five of massive corporate entities that really didn't need the funding as well. And what if we took that money and just rewarded farmers for climate smart ag practices? That's how we scale this. That's how we keep the carbon in the ground.
Yeah, I mean, it really makes sense, and it's again like, and I've had other conversations with people about like, we can't let perfect be the enemy of the good in this kind of situation of like, how do we get that incremental progress and continuing to like make steps towards both avoiding and then in this case removing carbon through sequestration and stuff. So,
Your screen
um,
froze.
yeah, it makes sense in that regard.
Yeah, sorry, you froze for a second there, but I got what I think I
Okay.
got what you were saying on that. And yeah, you raise a good point. I mean, why did we start in carbon? Did I think that this program was going to help reduce the world's temperatures? Not for the next 20 years, it's not. Um, but I did it for two reasons. It's a potential to put money into farmers' pockets. And it's a place to start. I mean, we've got to all try, right? I mean, so I think cap and trade is really where you will see a difference in global climate. But the voluntary market is how you get that going.
That makes sense. One of the things I wanted to touch on quickly is, you said right at the beginning, you started out in physical commodities, around, agricultural commodities and things like that, and moving then into more of this like digital credit space and stuff. Like, what are some of the big challenges that you saw along the way as you were like going through this shift around how agricultural commodities are shifting and trading in the carbon space?
Well, I mean, the thing that was most exciting for us was that up until carbon, our total addressable market, no matter hemp, frac sand, whatever we went into, was just the cash market. So if you're a good trader, the majority of your deal flow, whether you're on the supply side or the buy side, is going to be locked up in long-term contracts. But you need to be in that cash market. Price discovery, and things are always going wrong in physical commodity markets. There's droughts, there's pests, there's fires, there's port strikes, truck strikes, so the cash market also becomes the market of last resort. And then for the lucky guy on the opposite side, it's the market of opportunity. And that is one of the reasons why Pan Exchange was always going to scale,
Mm.
because the addressable market was never as big as our competitors always thought. They always thought they're going to revolutionize and the whole, sugar market or whatever market is going to be online, and that's just not true.
Yeah.
Because carbon is digital, it's not a bushel of wheat. It's a certificate. All of it has to trade online. So our addressable market really was, the voluntary market. Um, and that is also the first use case I found for blockchain.
Okay.
Um, Now, interestingly, you asked what the challenges are. Honestly, what surprised me was how much time I had to put into the legal side of this.
Mm.
Um, because you can't send it to a lab for weights and tests like you can a bushel of wheat.
Yep.
Um, and the value of that carbon credit is 100% lies in the perception of the buyer. How solid is this credit? So, and that really comes down to the legal framework of how this credit was earned.
Yep.
So that was the biggest piece of it. Um, it was also the first time in ag commodities that I found that blockchain actually was finally useful somewhere. And this was it. So,
Yeah. Well, and to your point, like that challenge around, how do we actually calculate the emissions reductions and some of that kind of stuff to, again, quantify what that carbon credit, that digital asset's going to look like, and being able to follow that through, different parts and like you talked a little bit before about all the different people that were involved in this process with their hand in the pot to a certain extent, and so having that blockchain aspect to this to verify and you know, make this stuff like much more like transparent, I guess, because there's been a lot of challenges in the market around transparency and trust as well. So, yeah.
right. And, there's still issues with blockchain. I mean, what all it does really is on my blockchain, I can, irrefutably prove that Bob sold a Joe. But what it doesn't do is how do I know that Bob didn't sell to somebody else on a different blockchain?
Mm.
Until these registries start talking to each other, then it's not foolproof.
And yeah, we were going to kind of talk a little bit about that because there is, there's so many different registries where carbon credits live in terms to be traded and bought and sold and some of that kind of stuff. Like, have you seen in this market that, making sure that there isn't any projects listed on multiple registries or that registries aren't, like not talking to each other and stuff like that? Like, is that still something that you're seeing as a huge challenge in this market?
I haven't seen that type of scandal, if you'll call it. I mean, I've
Okay.
seen more scandals as far as, people earning credits for cook stoves in Southeast Asia, and the cook stoves are actually just sitting in a warehouse and not being used, right? Or things like deforestation in Malaysia, and it actually wasn't happening. I mean, the protection of the forest land was
Yeah.
not happening. You've read all the Guardian's pretty good at this stuff, at uncovering
Yeah.
all these things. So those are more of the issues that I found around the different registries in blockchain.
Okay. But like you kind of indicated and alluded to, like making sure that all the registries are kind of talking to each other and stuff becomes kind of critical as well to
They
a
will
certain
have
extent.
to, and
Hmm.
like any industry, there is you look at the Gardner hype cycle. There are many will go bankrupt and many will get gobbled up in an M&A, and that's just and it needs to happen that way. So it's not like you need 27 different registries in the long run. There'll still be obviously more than one, but they will have to speak to each other.
Yeah. No, that makes sense. So then kind of taking a step back, we've been down lots of like rabbit holes and stuff like that with this. So like, what do you think sort of some of the challenges in the broader market are, things that will allow this market to scale, or where do you sort of think some of this market's going? Yeah, really kind of curious as your thoughts on that.
Yeah, I mean, I'm sure climate advocates were highly disappointed in the elections. Um, but I think what gives me hope is that the voluntary market is really demand driven, and
Mm.
demand in terms of not just consumers, but the corporate shareholders on the which is the buy side, right? And it's not, and you could even probably drill down the majority of those. It's not the shareholders; it's their kids saying, "What are you going to do to save my planet?" You know,
Yeah.
and that's a good thing. I mean, and I think that that will continue the growth of the market. I think for ag in particular, we've got to get around this issue of permanence,
Hmm.
and we have to make it easier and less risky for farmers. Or it
Yeah.
won't scale. It's just not viable for them.
Yeah. No, that makes sense. So, Julie, with that, I want to say thank you for joining me today, taking us down and into a deep dive into the agriculture space. So, yeah, thanks so much today.
Thank you. Just want to say one thing quickly, if
Oh,
I
yeah,
may.
please.
So we had to close our doors at Pan Exchange. We were offered a $1.3 million grant to integrate our entire carbon program into a blockchain and ecosystem, who will remain nameless. Um, they gave us a quarter million and then reneged. And so I couldn't pay my guys and had to close it down. But the reason I'm saying is this is there still are resources on our website if you just want to learn the basics of carbon credits and carbon trading.
Okay, for sure. And we can definitely link that through for everybody so that they can go check that out and learn more about it from the site.
Great. Well,
Thanks.
thanks for having me, Deb.
Thanks, Julie.